America owes over $35 trillion in debt. And that doesn't cover unfunded liabilities like Social Security or Medicaid. To give you a flavor for what $1 trillion looks like, is if you lined up $1 bills one after the other, if $1 trillion bills would reach the sun. Every 100 days, America's debt burden increases by $1 trillion. We measure growth by gross domestic product, and that is the sum of all goods and services sold by a country, less imports. America is doing quite well there. Some of the current things out are we are using to measure where we are is there's something called PCE, which is a tool used to measure the growth of inflation, and that seems to be stabilizing right now. Also, there's the Consumer Price Index, which is a fixed basket of goods, and the last survey was that was up 3.0, and now it's down 2.7, 2.9. A way that we measure whether the economy is in good shape is called the yield curve. What is a yield curve? Well, a yield curve measurement is a measurement to see how long or securities that are geared to pay in a long period of time, which typically you should get more money for, than securities that are held for a shorter period of time, which you should get less money for. There's more risk when you have someone hold your money longer. What's happened is that's inverted. So what's happened is it shows that people don't have confidence in long-term 10-year bills. They have more confidence in short-term bills. This has been going over 2 years. This is definitely a very bad signal for the economy. The prime rate is the rate that banks use to lend their best commercial companies, customers, and that's been dropping, which is a good sign. The federal funds rate is the rate in which each bank lends the other bank to meet its overnight reserve needs. There's something called the Purchasing Managers Index, and what that is it gives you a flavor for what purchasing managers are thinking in the future. In other words, how much inventory they're going to hold, what do sales look like, what does the competition look like, those type of things. They ask the purchasing managers, what do they see coming in the next 6 months? And that's been very poor for about 2 years. The savings rate in June has dropped in America. It's one of its lowest rates. People are not saving money. The unemployment number dropped 4.3. The United States was met with a credit downgrade by the credit companies from AAA to AA. And another thing that happened recently was the crash of the yen, which sort of set the markets in turmoil. Credit card debt is at an all-time high. Delinquencies are also at an all-time high. One thing that's happened that is rather surprising is the Bureau of Labor Statistics has recalled its number for the last year. Let me tell you what that means. Well, the Bureau of Labor Statistics, one of their jobs is to measure the employment levels of the country. And what happened was they revised the number almost 1 million jobs down, which meant that what was forecast by the Bureau of Labor Statistics was off by 1 million jobs. They were 1 million jobs short of what they told us. And just politically, really quickly, the Vice President has released part of her plan. She's calling for $25,000 down payments for first-time homeowners. She's calling for price ceilings or price caps, $6K for child care, no tax on tips, and a tax on unrealized tax gains. Her competition, former President Trump, is talking about having tariffs running 10% globally across the board. He also has stated no tax on tips. He offers a $5K child care tax credit, and to continue with the Trump tax cuts. If you enjoyed the video, please give me a thumbs up and have a great day. Bye.